Okay, welcome to the results of round number 2 of your simulation. So let's get right into it. This year, if you read the news, you would have found that markets were growing a lot. Home loans were growing at 12%, business loans at 8.1%, deposits at 5%, and credit cards were down 3%. Now, in terms of credit losses, so this is the column on the right-hand side, something which you're going to be obviously discussing in your lectures. In I think week 5 is when you did discuss it. 2 to 3 basis points for home loans. So that means $100 of home loans, I'm expecting to lose 2 to 3 cents. Business loans 4 to 120, and then credit cards inherently riskier 2.75%. So just remember the reason why those losses differ across products is because there's different characteristics. A product like a home loan is a highly secured product, meaning that if you don't pay your home loan back, the bank will take your house. A product like a credit card is an unsecured product, meaning that if you don't pay your credit card back, the bank really doesn't have any security. And that's why the losses are a lot higher on that product. Okay, let's talk a little bit about margins. Now, this year you had the ability to reprice based on the official cash rate increase. So the RBA had increased the official cash rate by 25 basis points. So in terms of your margins, that black line up the top, you actually increased your pricing by 20 of the 25 basis points. But in terms of your cost of funds, that actually increased as a market by 31 basis points. So as we said to you before, this is the core act of a bank. It's take money at one rate and lend it out at a higher rate and keep the difference in between. And this year we saw the margin fall a further 11 basis points. Now, we had the ability to reprice our business, and this really does link back to some of the things you discussed all the way back in week number 2 around the repricing gap and how that is the difference between your rate sensitive assets and your rate sensitive liabilities. So you had the ability to really think about that in this particular year. Now, in terms of the individual banks here, Grey Swan down 23, Shenzhen down 11, Piggy up 19, Red Bank down 9, Alliance down 29, and then Virtual down 13 this year. So what about business lending losses? So we're honing in on the credit risk of an individual product here. And what you'll find here is that all of your business lending losses have increased. Now, I want you to think about why these losses have increased. Have they increased because your business lending business grew, and so these losses have remained constant as a proportion of the business? Have they increased because of something you've done? Are they increasing because it's an indication of a deterioration and you're starting to see signs of stress in your business? Just make sure you think about that. In the real world, when banks are thinking about this, it really does link back to some of the things you've talked about in week 5, where you look at the credit risk of individual loans, and you might think about things like the RAROC on that particular loan. So, what is my income divided by my risk on that capital? Or you might even think about the portfolio view, which is the credit risk on loan portfolios and thinking about concentration risk. A lot of those factors really do come into play. Okay, this year you had the ability to acquire a neobank, and the final due diligence came in and confirmed that the neobank was growing at 25%, which was in the middle of the range provided to you. And their brand and their onboarding experience was going to provide a competitive edge. But there were some risks around this deal, and one of those risks was integration, which was challenging. And what we saw was that many key employees left as they didn't want to work for a major bank. With them went some major client relationships, so the starting point for your forecasts was 20% below where you thought it would be. So 3 banks actually chose not to bid, Virtual, Red Bank, and Grey Swan, which means 3 banks actually chose to bid. So let's take a look at where those bids were. PC Bank number 1, 205, that would have given them a pretty good return of 26.7%. But they are outbid by PC Bank number 2, which bid 244. The return there, 24.5%. Shenzhen bid 250. That would have given them a very healthy return of 24.2%. Piggy outbid them by a significant amount, $344 million. As the bids are going up, those returns are coming down. But Piggy, that was not enough to secure it because Alliance has won the neobank with a bid of 441, a 17.3% return. A pretty good return from a shareholder perspective. It's probably quite value accretive at the moment, so well done there to Alliance Bank. All right, let's talk a little bit about your treasury. So last year I actually opened up the simulation for you in the last round, and I did talk you through Treasury and making sure you had adequate amounts of funding. So this year there's actually two banks, only two banks that needed some wholesale funding. It was actually Shenzhen and Alliance, so 35 and 36 billion dollars each. So in terms of those individual banks, if you want to have a bit of a look into this, Shenzhen will take a look at you. Remember, it's really important to think about both your where you're getting your funding from and what sort of estimates you've got in terms of your assets. Because if you're underestimating how much asset you growth you're going to get, that'll actually cause you to have a big problem in terms of your treasury position. So remember, in week number 8, I think you guys all discussed liquidity management for your banks. So if we bring up Shenzhen, you'll see here you've got your actual treasury balance sheet. This was in the end of round number 2. So the first thing I'll just call out to you is that your deposits are 163 billion and you've got cash of 13 billion dollars, which is less than 10%. You probably want to hold roughly 10, maybe a little bit more, but it also depends on your decisions that you've made. And in this example here, you actually reduced your deposit rate in a market where the rates were increasing. So the question is, would you as a customer put your money in a bank which is paying you more or less? And so what that meant was that you thought you were going to get a lot of deposit growth in, more than the market, and this growth didn't actually come in, which is why you actually saw yourself run out of cash. So just really think about that piece, and if you need assistance with that, get in touch, admin@accelerateconsulting.co, and we can help you out. Okay, wholesale funding issues this year. Remember, the size of the bar tells you how much funding you raised. The percentages above tell you how much it cost you. So this year, the cost of wholesale funding has increased a lot, and we'll actually start to see some of those rates getting in excess of 5% from those expensive bailouts. Interestingly, piggy bank not needing very much wholesale funding at all this year, maybe entirely deposit funded. Okay, when we're thinking about raising this excess funding, when we raise it, the funding that we don't lend out sits there as cash. And remember, banks do have requirements around this, and that's what you're dealing with there. So you've got to make sure that you've got enough liquidity to ensure depositors can take their money out. And in the real world, this is managed by things like that liquidity coverage ratio, and also thinking about the term and the asset liability matching, which is where you call the net stable funding ratio. All right, profitability. This year, Piggy Bank has overtaken the PC banks, $3.8 billion, and the rest of you at around about that $3 billion, a couple of slightly lower profits from those hits from the emergency loans. All right, let's talk a little bit about your leaderboard. Now, customer satisfaction for a bank is very important. Nearly every bank globally has customer satisfaction as a key strategic priority. And the reason why is because happy customers are less likely to leave. The less pressure that puts on the bank to pick up new customers just to stay still or to grow, and it is cheaper to keep a customer than it is to pick up a new one. So the way you're going to drive customer satisfaction is by investing in things which exceed and delight customers. And we've got Shenzhen doing a great job in that regard. Alliance in second here, and then Virtual Bank in third place. Price is important to customers, but it is not something which drives significant amounts of customer satisfaction, because price is considered to be a very easily copied thing by anyone in the market. But when you invest in experiences that make customers' lives simpler, easier, less friction, those things are hard to copy, and they do build a point of competitive differentiation. Shareholder return, 60% of your overall score. So end of round number 2, we actually have a new leader here, Piggy Bank in first place. The PC Bank is in second, but Grey Swan in third, Virtual in fourth, and then Alliance seeing a big uplift, probably the benefit of that acquisition, coming into fifth. So putting it all together at the halfway point, what have we got? So big round of applause. We have a new leader, Piggy Bank into first place, Virtual Bank in second, and then a nearly equal third between Grey Swan and our friends over at Alliance Bank. Okay, this year you don't have a deal, but you have something else to deal with. So one of the challenges in banking in the real world is that the decisions that you face are not black and white. So what we're going to do is we're going to ask you to step into the shoes of a banking executive. We're going to give you a scenario, and we want you to discuss and work out which option to choose from. None of the options are perfect, and this has a lot of ambiguity in it. And this is part of the deal with the real world, is that often you get presented with situations and there's no clear-cut answer. So we want to see your views on what you've chosen and why you actually chose that specific option, and you need to make a comment or two on that in your weekly assessment. This year, we're also going to ask you to change CEO. So if you were the last year's CEO, click the Change CEO button. You get a list of everyone in your team, choose the person you want to promote, and that person will get a pop-up box asking them to accept their promotion. Please say yes. All right, let's move into round number 3 of our economic update. And sadly, a global recession has struck. Unemployment is skyrocketing and borrowers are defaulting. Debt investors are nervous, and the central bank is reducing the official cash rate to relieve pressure in the economy. So the bank bill swap rate has fallen 25 basis points, as has the official cash rate. So when you get into your business's screen, as a starting point, you might want to have your decisions, your pricing all down 25 basis points as a starting point. Not suggesting you leave it there, but if you forget to do that, it might maybe cause some pricing issues for you. The question is, how long will this downturn last? And the bulls believe that it's an opportunity to pick up market share from struggling banks. The bears believe it's only the beginning. Things are going to get much worse. Even though the central bank has reduced the official cash rate, wholesale funding costs have become very expensive because investors are very nervous at this point in time. For them to lend to you, they need to be compensated for the perceived risk. All right, let's get into round number 3. Everyone, good luck in round number 3. Just a reminder to you, this is what you need to do in round number 3. Have a look at your simulation performance. Read the breaking news. Dive into the cause and effect of your decisions in your peer insights. Okay. Then read the financials and think about the financial implications of the decisions that you made. Do your executive decision, and in your weekly submission, tell us why you chose each of the options or one of the options. Choose a special project, make your business decisions, and do your treasury. Okay, just remember you got to try and get enough cash, and think about these assumptions in the context of what's going on in the market and how your price is stacked up against the competitors. All right, as I said to you before, let us know if you need any assistance. Admin at accelerateconsulting.co. All the best. Good luck.